Good morning. Please come to this wonderful, amazing accounting standard 29 once again. So you are studying right now provisions, contingent liabilities and contingent asset. Provision part we have completed. Contingency part also we have completed. These are the three situations we have seen. If all four conditions are satisfied, provision. If one of those four conditions are not satisfied, contingent liability. But if the outflow of the resources is extremely remote, then even contingent liability is not required to be disclosed. Chances of payment is very remote, not likely to happen. Then in that case we are not required to even disclose it as a contingent liability. Now disclosure requirement for contingent liability, 4-mark question. What are the disclosure requirement for contingent liability as per accounting standard 29? So you will say an enterprise should disclose for each class of contingent liability at the balance sheet date. Each class means suppose you have a contingent liability for guarantee given, contingent liability for bill discounted, contingent liability for income tax dispute, contingent liability for workers dispute, for each class. Okay, a brief description of the nature of contingent liability. So you have to write what is that contingent liability. So you can write employee compensation claim under dispute, or income tax under dispute, bill discounted but not yet matured, guarantee given on behalf of ASF Limited, contingent liability 5 crore. Okay, brief description understood. Then an estimate of the amount. You have to write the amount also. Wherever possible, quantify the amount. Wherever possible, quantify the amount. An estimate of the amount as per measurement principle prescribed in provision. Indication of the uncertainty relating to outflow. So you can also mention about the outflow, when outflow might take place. Okay, and you can also mention about possibility of any reimbursement. What is reimbursement? Someone else will compensate you. For example, there may be an insurance policy taken against the loss. Is it right? Or you are a subsidiary company, parent company may reimburse the loss. Or you are a dealer, your manufacturer may reimburse the loss. Where any of the information required as above is not disclosed. Information required but is not disclosed because it is not practicable to do so. Because it is not practicable to do so, then that fact should be disclosed. So in case you are not able to provide some information as required in the previous 5 points, then you have to make a disclosure of the fact that certain information could not be disclosed because of practical problems. Is it right? Like generally in case of court cases, they do not give full information. Why they don't give full information about court cases? It may go against the company itself. It may go against the company. It may be some sensitive matter. So therefore they may not like to disclose it in the annual report because it becomes a public information now. Is it right? Certain information about the company may be sensitive. Therefore they may not disclose it also. Then you just have to make a mention that because of the sensitive nature of the information, it has not been disclosed as per AS 29. Now what is CA? CA, contingent asset, para 21. What is a CA? A possible asset. CA is a possible asset. That arises from past event. That arises from past event, and the existence of which will be confirmed only by the occurrence or non-occurrence of one or more uncertain future event not wholly within the control of the enterprise. Understood? CA is a possible asset. Okay, the existence of which will be confirmed only by occurrence or non-occurrence of one or more uncertain future event not wholly within the control of the enterprise. So, company has filed a case against the competitor for violation of trademark and company wants a claim of 5 crore rupees. Will it be recognized as an asset? No. Concept of prudence. You will recognize it only after winning the case, not before that. Is it right? Concept of prudence, conservatism. An enterprise should not recognize a contingent asset. An enterprise should not recognize a contingent asset because it is uncertain whether this asset will really be realized or not. But contingent assets are assessed continually. Contingent assets are assessed continually means every year you have to check whether this is still a contingent asset or has it become an actual asset. Suppose you are going to win the case, disclose it as a don't disclose it, just remember it is a contingent asset, but you have actually won the case, you have actually or lost the case, then it will become either an asset or a liability. So that is called continuous assessment. And if it has become virtually certain that an inflow of economic benefit will arise, the asset and the related income are recognized in the financial statement. So when will contingent asset be recognized in financial statement? Virtually certain. What is virtually certain? 100% sure. When are you 100% sure? When you have won the case and the other party has not filed a appeal to the higher authority, is it right? And is agreed to make the payment, then recognize the asset and corresponding income. Pass the entry, asset account debit or amount receivable account debit to P&L account. Amount receivable account debit to P&L account. Now the last part of this wonderful chapter is restructuring cost. Paragraph number 24, 25, 26, 27, 28 deal with restructuring. What is restructuring? Restructuring, to reorganize the business. Okay. Restructuring is a program that is planned and controlled by the management and materially changes either the scope of the business undertaken by the enterprise or the manner in which the business is conducted. That is restructuring. Scope of the business can be changed. What is scope of the business? Suppose a company was manufacturing chemicals, okay. What it is manufacturing? Chemicals. Where? In Agra, near Taj Mahal. So this factory where the chemical was manufactured was using outdated technology, was causing lot of smoke and pollution in the environment. So what will happen if there is a factory near Taj Mahal and it is emitting smoke every day? Taj Mahal will become blackish, yellowish, and then what will happen? It will get damaged. Then it will affect the reputation of India. People come from far away places just to visit Taj Mahal. And then when they will find, oh, this is Taj Mahal, they will do all chick, okay. My money has been lost. In the photograph it was so nice, so beautiful. But when I actually see this Taj Mahal, it is blackish, yellowish. All those beauty of Taj Mahal will fade away because of this factory. So what will Supreme Court do? Government will do? They will say, you please stop this business. We cannot afford to lose Taj Mahal. Can we? Even though we have to close the business, we can do that, but not Taj Mahal. So what this company will do? Stop manufacturing chemical. And now they will start manufacturing something else. Handicraft they will manufacture. A small Taj Mahal they will manufacture. Okay, made of marble, plastic, thermocol, paper, mud. Okay, paper also. How? After the class you come, 20 rupees fees, I will show you how to make Taj Mahal on paper. I will take a paper, draw Taj Mahal over, then color it. That is also one way. Drawings of Taj Mahal you can sell without causing pollution. Is it right? With proper decoration. So business model has changed. Have you understood the scope of work? Scope of business undertaken by the enterprise has changed substantially. That will require restructuring. That will require, or the manner in which the business is conducted. Suppose earlier you were selling through a store. Now you can sell online also. That is a manner in which the business is conducted. You were selling through branch network. Now you can appoint distributor instead of owning a branch, which requires a lot of headache. Why not to just give distributorship and act on principal to principal basis only? So your headache is reduced. That is called manner in which the business is conducted. So that is restructuring. Then example of restructuring. Paragraph 25. Sale or termination of a line of business. Sale of a business or maybe termination of one line of business. Instead of doing 3-4 businesses, you may stop one of them. Then the closure of business location in a country or a region, or the relocation of business activity from one country or region to another. That is also restructuring. So you may close your business in Agra and shift it to Gurgaon. Is it right? Yes or no? Or shift it to China or Karachi. What is the harm? Is it right? So that is shifting from one location to another, which what businessman can do in order to earn more profit. These are only examples. Now the question is, which you should have asked, but I am sure you will not ask, why we are discussing restructuring in this chapter? A provision for restructuring cost is to be made in the books of account. A provision for restructuring cost will be made in the books of account if 4 conditions are satisfied. Same 4 conditions. That is when the recognition criteria for provisions are met. Yes, what are those 4 conditions? 1. Present obligation arising from past event. Economic outflow of resources will take place and a reliable estimate can be made. So when the Supreme Court ordered the closure of the factory in and around Agra, then that company will have to restructure their business and therefore they will have to make a provision for restructuring cost because it's an order of Supreme Court. Present obligation, probability is more than 50%. Past event, you are causing environment damage. Supreme Court has passed a law. Is it right? And it will require outflow of resources and reliable estimate can be made. Okay. So some instruction to you. What will be included and what will not be included in the provision for restructuring cost. A restructuring provision should include only the direct expenditure arising from the restructuring. Only the direct expenditure arising from restructuring. Because of restructuring, these costs have to be incurred and which are necessarily entailed by the restructuring and not associated with an ongoing activity of the enterprise. Not associated with ongoing activity of the enterprise. Suppose this projector is not working or it is working but it is not giving you the good result. Student is not able to view it properly, so we change the projector. Is it a restructuring cost? It is related to ongoing activity of the enterprise. Every day we keep restructuring some or the other thing. Will it amount to restructuring cost provision as per AS 29? Not necessary. Okay. So restructuring cost will not include, while calculating the total restructuring cost, it will not include the retraining. What is retraining? Training again, because you might have to make the employee who was working in chemical manufacturing unit to make Taj Mahal. Will that person do the same activity? If you are a person manufacturing chemical and then next day you are asked to manufacture Taj Mahal, painting of Taj Mahal, can you do it? No? Difficult? Retrain this employee, okay? Or relocate the continuing staff. Suppose you have shifted from Agra to Gurgaon. So you have to incur relocating cost, marketing cost, investment in new system and distribution network will not form part of restructuring cost. Only few more instruction. When you are making provision for restructuring cost, do not consider future operating losses. Do not consider. Why? It is not a past event. We are in year 2018-19 and you are making provision for loss of 1920 in the books. Can we do that? No, past event is not there. Concept of prudence, second line. Suppose you expect to make profit on disposal of some asset in the process of restructuring. I have to close down the chemical factory and I have to manufacture Taj Mahal. So it may be possible some asset I might sell at a profit. Will you consider the expected gain on sale of asset while estimating the amount of provision? The answer is no. The answer is no. Expected gain will not be considered. Is it right? Future operating losses will not be considered. Expected gain on disposal of asset will not be considered. It's written in the last paragraph. Have you noted down whatever was not mentioned? Yes, you are a good student. Question mark. You are a good student? Full stop. Exclamation mark. Now one more question I will solve and then this wonderful standard will be over. So question on the screen. It is also a question in your book also, which you will find example 6 in your book. Example 6. Don't worry, it is there in your book. During 2004-5, Enterprise A gives a guarantee of certain borrowing of Enterprise B. Enterprise A gives a guarantee of certain borrowings of Enterprise B whose financial condition at that time is sound. What is the meaning of financial condition is sound? Solvent. Sound means noise. No. Then good. Sound means good. Okay. During 2005-6, the financial condition of the Enterprise B deteriorates. Oh, so sad. Financial condition deteriorates. What is deteriorates? Declines, becomes bad. Okay. And on 30th September 2005, Enterprise B goes into liquidation. What treatment should be given in the books of A? A has given guarantee on behalf of B. A has given guarantee on behalf of B. B has gone into liquidation. So first year, 31st March 5, what will be the disclosure, and 31st March 6, what is the disclosure? 5. No provision is required. Only contingent liability needs to be disclosed because it is a possible obligation. It is a possible obligation is contingent liability because right now the condition is sound. But because we have given guarantee, so guarantee may be required to be paid in case of uncertain future event. So don't recognize it. Only disclose as a contingent liability. And in 2006 what happened that other company for whom you have given the guarantee has gone into liquidation. Now the creditor will catch hold of your collar and say, pay the amount. You have given the guarantee, sit, take out the money. Now from contingent liability, it becomes a provision. There is a present obligation now. Now the probability is more than 50% that you will be required to pay. There is a past event. There is a past event. What is the past event? Guarantee given. Outflow of economic resources will take place because you have given the guarantee. So you have to pay the amount. And the last is reliable estimate can be made. Reliable estimate can be made. Hence, in the year 31st March 2006, it will be appeared as a provision. This standard is over.